Have you ever stopped to think about who really controls the money you earn, invest, and spend? It seems simple, but the game behind finance is much bigger than you imagine, and involves powerful institutions that few truly understand. Today I'm going to pull back the curtain on this invisible universe, where central banks and the Bank for International Settlements, the BIS, set rules that directly influence your pocket, your investments, and the future of the global economy. Get ready to understand how these game owners operate, because this information could be the key for you not only to protect your wealth but to multiply it. First, let's talk about central banks. They are the most influential institutions in the global financial system. Think of them as the heart pumping the economy's lifeblood, money, but it's not an ordinary heart. It has the power to create money out of thin air. That's right, creating money out of thin air. May sound strange, but that is exactly what happens through monetary policy. When central banks want to stimulate the economy, they create more money and put it into circulation. When they want to cool down the market to control inflation, they withdraw that money. It's a delicate balancing act, and every move affects interest rates, inflation, and even the value of the dollar, euro, pound, and other currencies. Imagine the impact this has on your life. When the central bank raises interest rates, the cost of credit goes up, which can slow consumption, reduce business investments, and even cause stock prices to fall. On the other hand, low interest rates encourage spending and investment, but can lead to inflation. Now think, how does the central bank decide when to adjust these rates? It relies on economic data, global trends, and of course, what's happening inside the country's own economy. All of this to maintain financial stability and ensure the currency doesn't lose value. But there's an important detail. Although the central bank is a public institution, it is also highly influenced by political and economic interests, so its decisions are not always simple or transparent. If the central bank is powerful, the BIS, the Bank for International Settlements, is the pinnacle of that power. Founded in 1930, the BIS acts as a bank for central banks themselves. It's where the biggest global decisions about monetary policies are discussed. The BIS is a private entity that brings together nearly all the central banks in the world. They meet in Basel, Switzerland, to strategize, coordinate policies, and ensure the global financial system operates without major crises. But here's the catch. The BIS doesn't report directly to governments, and its decisions are shrouded in secrecy. This creates a closed club that can influence the course of economies, capital flows, and even global financial stability. For example, in times of crisis, the BIS acts as an intermediary to facilitate loans between central banks, helping to prevent a larger collapse. This, of course, protects big global interests. Now, you might be wondering, this is all interesting, but how does it affect my daily life and my investments? The answer is simple and direct. Everything central banks and the BIS do influences the economic environment where your money is invested. When interest rates rise, for example, loans become more expensive, which can slow down the real estate market and cause stock prices of companies dependent on credit to fall. Inflation, in turn, erodes the purchasing power of your money, and this is controlled precisely by these institutions. But the financial market moves fast. When a central bank decision is anticipated, investors start acting before the official change, buying or selling assets to protect themselves or make money, and that is exactly where the advantage lies. Understanding the signals and decisions of these institutions can put you many steps ahead of the majority. If you want to keep receiving content that truly opens your eyes to the hidden workings of the markets and helps you make smart decisions, be sure to subscribe to the channel and turn on notifications. That way, you'll never miss an important tip to make your money work for you. Now, let's talk about what separates an average investor from one who wins in the long run. Smart investors don't wait for official decisions to react. They study central bank behavior, follow BIS announcements, analyze economic indicators, and position themselves before the market moves. This requires discipline, knowledge, and access to the right information, but the reward can be huge. Fewer losses during crises and more gains during growth periods. If you master this art, you will transform the way you see money and how you participate in the global financial game. The financial world is a board game where few truly know the rules. Today, you started learning those rules. From here, what you do with this information can change your financial life forever. Are you ready to take the next step? Have you ever felt lost when hearing about central bank decisions, interest rates, and acronyms like BIS? If so, you are not alone. These are key pieces of the global financial game, but many people don't even know they exist, much less understand how they work. The problem is that without knowing these mechanisms, you are basically investing blindly, and in financial markets, not knowing the rules can cost you dearly. That's why today I want to take you inside this universe, so you understand how your money is influenced, controlled and shaped by institutions operating behind the scenes, and what you can do to turn the game in your favor. Imagine an orchestra. The conductor of this orchestra is the central bank, controlling the rhythm of the economy. It does this mainly through the basic interest rate, the one that impacts everything, from financing your car to the interest on your credit card. But unlike a traditional conductor, the central bank has an almost magical power. Creating money, yes, it can increase the amount of money in circulation when it wants to stimulate consumption and production. This power is used carefully because if the central bank releases too much money, inflation spikes and the currency's value falls. On the other hand, if it restricts money too much, it can slow economic growth and cause unemployment. These decisions are based on a series of economic indicators like GDP growth, unemployment, inflation, and market expectations. For example, if inflation is too high, the central bank can raise interest rates to make money more expensive and thus reduce consumption. But this decision is not simple because it directly affects companies, families, and, of course, investors. A change in interest rates can make an investment that seemed profitable lose value overnight. If central banks are powerful, the BIS is the global command tower. It functions as a meeting point for central banks worldwide to exchange information, set policies, and coordinate actions to avoid major crises. But unlike a central bank that answers to a country's interests, the BIS acts to protect the global financial system as a whole, which doesn't always align with the interests of individual populations, because the BIS has a direct influence on how currencies function, on market stability, and on global financial health. It also coordinates rules that affect commercial banks and, consequently, credit and money available to companies and individuals. Have you noticed how news about interest rate hikes make the stock market fluctuate, or how inflation erodes your money's purchasing power? This is all a direct consequence of decisions made by central banks and the BIS. And the most impressive thing, those who understand this process can anticipate market moves, avoid losses, and seek safer and more profitable investments. Did you know that the money you see in your pocket can be created out of nothing? This is real, and it has consequences you never imagined. Central banks and the BIS are the most influential institutions in the global financial system, and understanding their actions is essential for any serious investor. Very few people in the world truly understand how these mechanisms work. You are about to join this select group. The sooner you learn to interpret these decisions, the faster you can protect your wealth and seize opportunities. Instead of reacting to central bank decisions, the smartest investors study their communications, track indicators, and take positions in advance. This can be done with different strategies, from allocating assets more safely during periods of high interest rates, to taking advantage of opportunities in currencies and stocks that benefit from specific monetary policies. Investing is not just about picking stocks or funds, it's about understanding the context where money flows, and that context is decided in big rooms where few have access. But today, you took the first step toward understanding this reality. Do you want to continue this journey? Then don't forget to subscribe to the channel and turn on notifications to receive more content that can transform the way you invest.